webinar co-hosted with the WIIN Network. We're very excited to see so many of you here. In the spirit of this being a kind of open, informal conversation that's very warm, we want to encourage everyone, if you're comfortable, introducing yourself in the chat, sharing any contact details such as your LinkedIn or an email if you'd like to stay connected. My name is Sarah Abrahimi. I'm the co-chair of WIIN, and I work at the International Finance Corporation. We've got people trickling in still, so we're going to give it another minute or two. If you want to start introducing yourselves in the chat, that would be excellent. Great, good to see some people giving introductions there. We try our best. I know that it's unfortunate that we're in this virtual environment, but one of the pillars of WIIN really is to facilitate networking, getting to really be connected to others within the industry that you otherwise wouldn't have. So we want this to be really open, vibrant conversation. We do have dedicated Q&A at the end, but as anecdotes pop up, reactions, side notes, links to share, definitely be putting them into the chat. We want this to be a great conversation and very interactive. We're trying to keep Zoom fatigue at a minimum. Great, excellent. Welcome, welcome. Well, for those that are just connecting now, I'll introduce myself again. My name is Sarah Abrahimi. I'm one of the co-chairs of WIIN, which is the Women Impact Investing Network. We're based locally in Washington, D.C., but we're very excited to now have one of the added benefits of being in a virtual environment is to be able to get to know and to connect with others that are from beyond the D.C. area. I'm very, very pleased to have an excellent set of panelists today that I can't wait to jump into a conversation with. But first and foremost, I'm going to pass over to Laura Hill and Renee De La Rada, who are two other WIIN board members who will be your co-hosts for today. So keep the introductions going into the chat and looking forward to a really great conversation. Over to you, Laura and Renee.
Great, thank you. I'll just introduce myself quickly. I'm Renee De La Rada, and the manager of credit underwriting at Microvest. Microvest is an impact investing asset manager. We have about 300 million in AUM, and we primarily invest in responsible financial institutions in emerging markets. So we do seek to deliver a double bottom line return. So that's a market rate of return plus a social impact return. And the latter is done by increasing access to financial services for underserved entrepreneurs. I help manage our investment team and oversee Microvest investment analysis. And I joined the WIIN board in January of this year as a volunteer board member.
Thanks, Renee. My name is Laura Hill. I am the Chief of Staff, Head of Corporate Operations at Equify PBC, a fintech company that displaces the use of debt with equity co-investments into homeowner-occupied residential real estate. I'm also a co-founding member of the Phoenix Fund, an early-stage investment firm focused on underrepresented entrepreneurs and resilient entrepreneurs. I am super thrilled about this event, and thanks everyone for joining.
Great. So we'll flip to the next slide, Laura, and then I wanted to echo Sarah's warm welcome to this is WIIN's year-end event, and we're hosting it in conjunction with the WIIN Network. And so for those of you joining a WIIN event for the first time, we're a DC-based network. We're founded by women in the space to foster leadership and collaboration across the impact sector. We're completely volunteer board, so our focus is to build bridges and to spark conversations across the diversity of players in this space. And that's a theme we think is very aligned with today's topic. So that's a little bit about us, and we would love to hear more about you all who are joining. I'll pass it back to Laura for a quick poll.
Yes, okay, so we're about to launch the first poll of today, and that helps us understand where you are located. So let me see when you're able to visualize. Okay, I think you're able now to insert your answers. You know, WIIN used to be a very local organization with a local focus, but thanks to the pandemic, we've been not just national and domestic, we've done international and global. So it's fun to see where you guys are. Perfect. I still see some votes coming in. Great. Okay, 5 seconds to go. Yes, one more vote coming in. Okay, great. We'll end the polling now. And okay, we stay true to our roots. Most of us are in the Washington, D.C. metro area. This is great. We look forward to seeing you in person sometime next year. Thank you so much for pulling in for WIIN. Okay, and now let's go with the second question, which is about your profession. We're asking because we want to understand how to best actually tailor this conversation to meet your needs, your desires, or your knowledge or background. Okay, great. Lots of development professionals. That's awesome to see. I can still see what's coming in. Okay. Take your time, guys. All right. Nice. Okay. I think the first 2 votes are coming in, and we'll end the poll now and share the results with you. Yes. So like we were saying, many development professionals today and also impact professionals. There's also investors in the crowd and some other professionals with us. Perfect. So let's move on to our third question. It's about, well, technically what are you seeking to get out of this event? What is the main objective for being here? WIIN is known to be a very network-oriented type of organization. We believe in sharing knowledge and also network as part of empowering women in the impact investing arena. So if you're here to learn and grow, you're in the right place. Okay, some votes coming in. Perfect, we'll end the polling. And yes, so let's share the results. Yes, consistently with the WIIN's mission, you guys are here for the right reason. Most are here to build their network and also learn more. And you will be in great company today because our fireside chat leaders will rock this session. So we'll stop sharing the results. And okay, the last question for you guys today. We're interested in understanding how you heard about us, if it was a newsletter, a social media, a tweet, something along those lines. We just want to see what marketing is most effective in outreaching. Okay, wonderful. I can still see votes coming in. Let's give it another 5 seconds. All right. Thank you so much. I'm gonna end the poll now. And okay, lots of WIIN newsletter people who've heard either from us from a newsletter or a are probably a LinkedIn post or a website. So thank you so much. I will share the results with you and we are ready to get going. Thank you so much, everybody.
Great. So just next slide here, if you don't mind, Laura, thank you for that great poll. Today's event, as you all know, it's a fireside chat, and we're going to be following that up with an active Q&A session. As Sarah mentioned at the outset, we really want to make this as interactive kind of as the format allows. So please do remember to log your questions as they come up, as you think of them, into the chat box, and we'll grab those and pull those for the Q&A that will be held sort of at the end of the event. And then to simulate sort of an in-person event, at the hour mark, we've reserved about 10 minutes for a really quick networking opportunity. So we hope everyone can stay and attend that. And then I'll just give a quick intro on the nonprofit we're sponsoring for this event, which is the Capital Area Food Bank. They're a leader in the DC area on addressing the challenges of hunger. So we know the pandemic and the economic downturn have really increased the severity of this issue. We're really excited to be able to support an organization that's just doing so much for the neediest in our region at this time. And now for the headline event here, we're really thrilled to have Fiona McCauley with us today. If we could just get her slide up, Laura. She's got a really impressive track record. I'll give a quick intro on her. She's been both a trailblazer, professionalizing the global youth development sector, but she's also an established leader in kind of cross-sectional cooperation. She's successfully scaled and exited 2 social enterprises and now serves as a founder and CEO of the WIIN network. So I'll let her introduce that more. But she somehow also finds time to serve as entrepreneur in residence at Georgetown's Business School. And on top of all of that, she's just been incredibly generous with her time to WIIN. She's brought her talent and energy to our advisory board. And Fiona is going to be interviewing Rihanna Nasu, who we're equally excited to have with us today. And that's going to be on Rihanna's experience in the impact space and on founding and leading Spectrum Impact, which again, I'll let her introduce. We'll hear sort of about her personal journey in a few minutes. As a teaser, she's previously designed and led impact investing programs at a really wide range of institutions, and that includes the Case Foundation, the Bank of New York Mellon, the Rockefeller Foundation, and the UN Capital Development Fund. And she also somehow finds time to serve as adjunct professor. She teaches impact investing at Georgetown's Global Human Development Program. So Fiona, over to you.
Great, wonderful. Thank you so much for that generous introduction, Renee. And I'm delighted to be here and would just love to invite all of us on our screens to just offer a round of applause for our amazing partners at WIIN who have put this session together so thoughtfully. So Laura, Renee, Sarah, Jessel, just a huge thank you to you. So I love hearing that we're here to network. Yes, I love hearing that we are here to gain expertise in what's going on in the impact investing sector. Like, yes, WIIN is about supporting women leaders to advance their influence, their power, their opportunities. And so what Rahana and I have kind of cooked up together with our colleagues at WIIN today is really geared to providing you with critical information that could support career advancement, career enhancement, as well as to be able to build your network. So on that note, I'm going to invite all of you to keep networking over the chat. So as Rahana and I tackle various topics, if there's an article you've written, if there's a resource that you want to share that you or your organization or someone else has generated, please keep putting that in there. We definitely feel like that is a valuable opportunity to keep the network going from top to tail in today's session. And of course, after Rahana and I have had our fireside chat, you'll be going into breakout session groups, which will be a great opportunity to go deep with some folks. So Rahana, what a thrill to be here today, being able to talk with you. Rahana is a colleague of mine at Georgetown University, and it's always a pleasure to be able to spend time with amazing leaders and to be able to delve deep into a topic. So on that note, Rahana, at this moment in time, what role is private capital playing in the global development sector? What's old?
Great. Right.
And what's new? So maybe sort of an insight into some of the trends. And also a number of us here are interested in thinking about how we might move into the impact investing sector. So I welcome, sort of background information. Please don't take for granted that there's anything we know. For some of us, it might be a refresher, and for some of us, that's going to be new information.
Great, wonderful. Such a thoughtful question to kick off, Fiona. And let me just say how beyond thrilled I am to be with all of you today. Both the WIIN and the WILD communities have done an incredible job at pulling together conversations like this. It's so hard. At the end of 2020, everybody has a little bit of Zoom fatigue. So just to see all of these wonderful faces and lots of interest when it's already December is just wonderful. So thank you so much for having me. I'm so thrilled to have this conversation, Fiona, and to be with you. I might, it really is a really important question in terms of contextualizing this particular moment that we're in right now. And I think the reason why so much conversation around the deployment of private capital to development solutions is occupying, I think, brain space at the moment is really indicative of the year that we've actually just been through. All of my global development colleagues on this call will adamantly remind us that some of the challenges that we're trying to solve are 300, 500,000-year-old problems, right? It's not like we just happened upon deterioration of climate. It's not like we just happened upon poor quality of life for every human being across the globe. These are very consistent and constant issues. I think what we're finding in the year 2020 is that a combination of the pandemic and the movement around racial equity in a lot of economies, particularly in the United States, are reminding us that we don't actually have sufficient solutions to complex social problems, that the social safety net that we all believe to have opted into is not delivering services to everybody across the globe in equal measure. And so I think a lot of why we're seeing an impact investing conversation become very popular right now is because there is an incredible spotlight moment, surfacing things that we've already known to be true for quite some time. And that is that we obviously need much more capital going into areas where we need profitable solutions. In your encouragement to assume that we're all sort of digging into this together, I might offer by way of a definition, because I think that's helpful, what I mean when we talk specifically about impact investing. So in the work that we do, impact investing is specifically deployment of capital into companies, products, or funds where you are intentionally hoping to generate a financial return and a social, environmental, or governance return. It's often thought of as double bottom line investing or double bottom line approaches. And the reason that I just bring that up is because for all of my impact investing colleagues on this call, you will know that that's a lot harder than just plain old traditional investing. In a traditional investment context, it's really easy to structure investment for one specific thing. That is not the challenge we have in impact investing. And the challenge in impact investing is we're trying to do two things, and we're trying to do two things very well. We're trying to do two things intentionally. We're trying to generate returns across 2, sometimes 7 dimensions. And that makes the work of this investment approach much more complicated. So I think in addition to the incredible need that we're seeing in this moment of let's deploy capital to the areas that we need it the most, we haven't lost the complexity. It's still a very complex body of work to engage in. Oh, Fiona, I think you're just on mute.
Thanks so much.
Thanks
so much for that, Rahana. So on the continuum of impact versus returns in impact investing, does an impact first strategy fit better into the international development paradigm?
It's a really important question. So our firm, Spectrum Impact, is a impact investing consulting firm that principally works with investors to help them decide how they want to play in this space. And a lot of the work that we do with investors actually has very little to do with impact and has a lot to do with investing. Those of you that come from the traditional investment universe, of which I know we've got a lot of really motivated, passionate investment professionals here, will know that making that decision is really a decision around risk and return. It's inherently in the investment universe, it is a decision around trade-offs. How much risk are you willing to take on, and what is the return that you expect to make that risk worthwhile? Impact investing is not very different. That risk return trade-off is still a critical starting point in trying to figure out where you should play in the impact investing ecosystem. It's complicated, of course, by this third dimension around impact. So when people talk about trade-offs in impact investing, it's not as binary as trading off financial performance for impact performance. It's actually a little bit more nuanced than that. For the kind of impact that you want to have, what is the higher level prioritization across risk, return, and impact? And we do have, Fiona, to your question, a host of impact investors out there that are impact first investors that believe that outsized social, environmental, or governance impact is far more compelling than a financial return. And so when push comes to shove and you can eke out one additional unit of impact, you as an impact first investor might be willing to give up one additional unit of financial return. In an emerging market context, to your question, we are trying to find solutions that are so innovative that to say that track record is non-existent would probably be an understatement, right? We're trying to find a completely different way of providing access to water for everyone on the planet. We're trying to find a completely different way of avoiding maternal illnesses that some parts of the world have eradicated and others have not. So yeah, sometimes impact first investment is very critical. I would say, though, that one of the things that's been really interesting in our work is to think about the delivery of innovation, not so much as finding a new solution, but taking an existing solution and applying it to a new context. I think sometimes we get so excited by the new way of doing X that we forget that in some markets, there is more similarity than there's difference. There's a real opportunity to take what works in Bolivia and take it to Bangladesh. Context-specific things need to change, but I would also say that the innovation and impact investing is actually other market application. And in those situations, concessions are not always needed, that actually we can generate a return for proven, tested solutions. We have some work to do, I think, in an emerging market context to rethink risk, which is an area that I think I'm hoping that we're going to see a lot of movement on the investor side. And we can dig into this, Fiona, as much or as little as you like, but there really is a lot around perceptions of risk that development professionals are perfectly suited to educate investors.
Oh, interesting. Okay, let's delve into that.
Yeah.
So why are global development practitioners well suited to work in this space? When you say that they're perfectly suited to sort of play a role there, what role are we talking about? And what is it in their backgrounds that positions them so well?
Yeah, I would say that, and this is very much a personal belief, not a lot of data to back this up, more experiential, but I do think that if the market-based system had all of the solutions, this conversation wouldn't be had. That if we took a market-based principles approach to development, that we would consistently design and develop solutions that the market would then fund, that would then scale, that would develop customers, and the cycle would continue. The flywheel would be in effect. I think we all know firsthand that that's not quite how the world works, right? That there are non-market-based principles that change the way that people think, act, and consume. And development professionals, I think, are trained specifically in a multi-sector way of thinking. So what I mean by that is, when I was in graduate school, I did a master's degree in development finance and foreign policy. I think the biggest takeaway for me, quite frankly, was how complicated the systems that we are trying to work in are. That a financial solution is never really just about a local financial market. It's also about culture and economy and community. That a solution around domestic violence in an emerging market is not actually just about culture. It's also about finance. It's also about economy. So the interconnected way that development professionals are trained, I think, are uniquely suited to this moment in time. And what we need to do is start thinking about these problems as in a complex fashion, because they are complex. So if development professionals can be a part of the conversation, there's a way to attract private sector capital, which we absolutely need. There's no way to still solve a $30 trillion financing gap without a $180 trillion capital market. So we need to bring the private sector. There's no other way to do that. But to do it in a way that I think is appropriately adjusted for the complexity of the moment, multi-sector thinkers are needed in the conversation. And to me, that is development professionals. I also do think that there's a really unique conversation that needs to be had around risk. So often in an investment context, the number one thing that investors are trying to avoid or price is risk. Risk of investment failure, risk of reputational failure, risk of operational failure. And a lot of what happens in risk is not actually calculatable, it's perception. And consistently, I think, particularly over the course of the last 150 years, there is something about doing business in emerging markets that continues to suffer from the perception of risk, not the calculated fashion of risk. And that perception is just as much, if not more, of a barrier than an actual financial model, right? You can put all the math into an Excel spreadsheet, and the Excel spreadsheet can tell you, actually, there may be a really cool opportunity in investing in water solutions in Bolivia, but the perception of risk will immediately blank out all the cells. For my Excel nerds, that's a clear all on the entire sheet, right? Like it's as if it never happened, right? So you guys can see how my brain works. That's it. If it can fit into a cell, we're good to go. So I think the perception, the idea that these markets are risky, unsustainable, lack customers and consumers, development professionals know better. They've seen those markets in action. They understand the complexity of a multi-sector solution. And moving on perceptions of risk, I think, is not going to happen just through the traditional investment sector. That this is a really amazing moment for development professionals to flex their muscles.
Okay, well, thank you for that. So you've really underlined here that I don't need an MBA.
Right.
I don't need to have worked at Goldman Sachs or somewhere
Right.
else on Wall Street to
Right.
be attractive to the impact investing sector. Okay, got it.
Yes.
So let's imagine then I am thinking about positioning, maybe I've been working in global development for 5, 8, 10 years,
Mhm.
thinking about positioning myself to be able to move into that impact investing space.
Yeah.
Right, you've just underlined how the ability to help mitigate risk is so critical. Global development practitioners
Right.
well positioned for that. So
Yeah.
what might be the kinds of things that I would say in a cover letter
Yeah.
or say in an informational interview or maybe even the interview,
Yeah.
sort of to really highlight that what the value of my creds and and the perspective that I'm bringing?
Such an important question. If you had asked me, so I got involved in the impact investing sector about I keep saying a decade, but each year that passes, I keep saying a decade. So minimum a decade. There's a little denial going on here. Minimum a decade. When I was graduate school, it really felt like the wild, wild west, that if you didn't have that B school degree, the investing part of impact investing was so prominent that there really wasn't a role for you. I think today, to any folks that are coming out of training programs right now, it's a completely different story. And I think it's a different story because we've realized that we need two types of professionals in this space. Probably that's overly simple, Fiona, but for the sake of our conversation, let's say it's two. Transaction level folks that absolutely need to be trained in financial modeling and investment concepts, and systems change folks, which is where a firm like mine operates. That where the skill set needed is critical analysis, the ability to do really thoughtful research, the ability to take really complex concepts and translate them for a larger uninformed audience. That the things that I think make people good, thoughtful workers, quite frankly, are really, really a great fit for an industry where translation and accessibility are key. So if you are interested in the systems change level of things, if you are motivated by the idea that in 25 years, impact investing as a term won't exist because we will do every investment with impact. If that motivates you, like it motivates me, your ability to be a really critical thinker and ask good questions and research and write and communicate are fundamental. If you decide that you're a transaction level person, a lot of my friends in the space are, and I marvel at what motivates them because it's very different. There are ways to train yourself. So when I was at Bank of New York Mellon on the fund design side, I did not have an investment background. Every spare hour of my time was on Coursera, was doing Wall Street prep, was spending hours and hours and hours taking certificate classes. They weren't always cheap, but they were sure as heck cheaper than another graduate degree. And it was a personal investment. It was a personal investment of my time to teach me the technical skills I didn't have. But that didn't teach me how to be a development professional. It didn't teach me how to be a critical thinker or a researcher. And so I think my biggest takeaway to so many students that I have the pleasure of working with, as I know you do too, is that the things that you think stop you from this space, you can learn. You can learn in 6 to 8 weeks, you can learn in 6 to 8 months, you can learn for $500. That shouldn't be the reason why you don't do it. So I would just say that the things I think that graduate school really pull out of people, or that experience pulls out of people, are exactly the same things to survive and thrive in this industry.
Wow. Well, thank you. That is very clear. I love what you were saying about, you can put yourself through an impact investing boot camp in 6 to 8
Yep.
weeks or 6 to 8 months. So this is a question to everyone participating. If you have any resources you want to share, certificates you've taken, courses you know of that you want to recommend, please throw those down in the chat. And Rahana, do you have a couple that you would want to add to that list for people to take a
Yes.
look at?
No, I love that. So I actually think Wall Street program, it was painful. I mean, I am not an accounting expert. It was demanding things of me that I just didn't find that motivating, like the best way to format cells. I will say at the end of that journey, it's an excellent resource. There are lots of promo codes and coupons available through your school. So if you are a grad student, lots of ways to get discounts. I also think that there's some really great Acumen sponsored content actually on Udemy. Acumen has put a lot of time and money into deep dives on some of these topics. Our firm has actually tried to add to the body of knowledge a little bit. So if you go to the resources page of the Spectrum Impact website, which I can throw in the chat, we actually have a strategy toolkit that you can download, which is a modular series on how to build an impact investing strategy for free. We also have a webinar series from the summer that actually goes into different concepts and topics within impact investing, measurement, asset management, wealth advisory. And so those are all available online. And I would happy to share those out, but I think lots of really great free content out there to just further your knowledge.
Okay, excellent. Thank you. And I see that Zaki and Sarah are also offering us some good resources in the chat. So folks, make sure you copy and paste that before the end of the session. Okay, well, let's now bring it back like personal to each of us. If any of us here wanted to get into the impact investing space, you know, maybe from a career perspective, but what about investing our own money?
Yeah.
If I had $1,000, if I had $500, if I had $5,000, how could I enter into the impact investing space? How could I invest that money?
Yeah. I'm probably sounding a little bit like a broken record, but if each of us was a client of Spectrum, I would say that the very first starting point is know what you own. So whether you participate in a 401k or you have zero investments or you have all of your wealth privately managed, you have the right and the responsibility to know what's in your portfolio. Talk to your 401k administrator, talk to your plan manager, download the prospectus, look at the underlying holdings. I think the second step is to understand in yourself what kind of investor you are. And I don't mean impact investor, I mean investor. I think sometimes when mainstream news publications pick up impact investing content, there's usually always a line in these articles that says, go and invest in this incredible fund. Well, unless there's any secret cajillionaires on this call, asking people to do that, to take a large chunk of their capital and put it into relatively risky, illiquid investments is inappropriate. It's also not possible. So in the United States, for example, you need to be accredited or a qualified investor to get involved in a lot of the impact investing products that we talk about, right? To your question, Fiona. And that's not going to happen until you hit certain wealth levels. And so once you, I think, go through that process of what is my risk? No, I guess I don't want to lose my whole 401k in one fund investment. Then the universe actually starts to open up. You can have an impact investing product in every single asset class. And there are asset classes that are perfectly suited to us as individual investors. Public equities is one. So that was my example about the 401k. Dig in a little bit, see what you own. If you don't like it, send a note to your plan administrator. If your plan is provided by your employer, this is an incredible moment for shareholder engagement. Go to the head of ops, go to the legal and compliance folks, talk to them about what you don't like, start a conversation internally about how the organization can be a shareholder advocate, which they absolutely are as a member of this plan. And if that's not working for you, if there isn't really that consensus building approach, there are asset classes available to you. Private debt and community-based investing are an amazing opportunity to demonstrate the value of your dollar. The incredible WIIN board members, almost all of them, I think, are involved with some organization that brings power and democratized access to the impact investing world. So start with the WIIN board. Look where these people work. They have investment notes that you can probably get involved with in some way. That's what I do with my portfolio. So I have private debt notes, so investment notes that generate a very nominal return, but are very thoughtful, impactful products that take my money, pool it with other people, and actually deploy them in some of the markets that I'm really passionate about in my work. You can buy them as cheaply as $20. You can buy them as expensive as $5,000. I can share some resources on some of these organizations in the chat. Of course, this is not investment guidance in any single way. Please make sure you're making your own investment decisions, but there are options for us. They're not going to be Elon Musk, Jeff Bezos, knock them out of the park, $1 billion investments. They are going to be right-sized for who you are as an investor, but every single dollar matters. And then the last thing that I would say, Fiona, is I think in an investment context, we forget about voice. You can do more damage with 144 characters than sometimes you can do with $1. And that the people on this call represent, I think, a massive generational shift to empowered consumer choices. You don't just have to invest. You can demonstrate your values based on how you consume and what you buy. And so if the investment option is not for you, take a little look at what's in your pantry or in your cleaning cabinet or in your closet, and think a little bit about what kinds of companies you want to put your money with.
Thanks, Rahana. I love your call for activism using our voice, and our dollars and our purchasing power. So right on. And you gave us some very specific ways that we can think about making investments, influencing investments, and to acknowledge that Lily and Crystalie in the chat have also offered us some concrete options. So everyone who's in on our discussion today, feel free to share other links you have that could be useful. Rahana, in just a moment, I want to come back to you and ask what you see as a significant success story of where the global development sector has benefited from impact investing and vice versa, like just to pull the curtain a little bit behind maybe some of the success stories that we may have heard about, to hear, I think 1 or 2 examples that you think are truly successful and why.
Yeah.
Before I come back to you on that, we've covered a lot of ground here. So I'm also going to invite all of us on the call, if you have any questions that you want to pop into the chat, would love to start receiving those, and we'll move to your questions in just a minute. So then before we get to those questions, Rahana, what success stories come to mind? Not the sort of fluffy, success story covering up all the warts and all, but really the true success stories that you think that would be worth us looking up and sort of learning from as we think about these opportunities we have for the global development sector to benefit from impact investing and vice versa.
It's an important question. And I love, Fiona, that you said sort of warts and all, because I think that's most reflective of this work, right? That, again, take impact out of the investing consideration and you are making compromises. That is the business of investing. It's no different with impact investing. There's just more on the line, which is why we care, I think, so much about getting it right, because there is more on the line. There are 2 examples that actually come to mind that demonstrate kind of seemingly contradictory advice to what we get out of the tech-infused boom of Silicon Valley in the United States. And they are both examples of using locally right-sized, context-specific assets to generate impact. So the first one is Husk Power Systems, which is an Indian-based evolution that really thinks specifically about the way that we use energy byproducts to generate energy. So it's an incredible story, and I probably don't have all of the latest updated details, but it's an incredible story of a pilot in India where the corn production is quite prolific. The husks of corn can actually be used to create a biodiesel-based product that can then provide an energy source. So in the Husk Power Systems example, you have this sort of agriculture-based economy. The waste from corn production can be used for biodiesel generation. The waste from the biodiesel generation can actually be used for candles that can be sold in local economies and markets. There is a very organic and unique full supply structure in an Indian context that does not include cool app downloaded on mobile phone that nobody has with internet access. It is about the local context. Husk is, I think, an incredible story to me because it shows that in every situation that there are assets that can be used to generate wealth. You just need to be creative about it. And you need to, I think, design what works for the local economy. Another great example that's quite popular, I know, is the East African example of M-Pesa, which really took the idea of mobile money based on an SMS service instead of, once again, a really high fancy powered app in a market where the infrastructure to support that kind of technology just does not exist. And I point to those because I think they really fly in the face of what we do here, which is who's got the cool new tech thing that then we can scale to a market that's already pretty saturated. And so I just bring those up because I think they push us a little bit to think about what does entrepreneurial success look like? It does not have to look like something that a fund out of the West Coast would support. I think to provide a little bit more color on the warts, because that is important. I think maybe just a general comment, and that is that I think I said this a little bit earlier, but we tend to think of the source of innovation as being a North American responsibility, and the application of innovation as being an emerging market responsibility. And I think that is very short-sighted, that some of the challenges that we need to face are perfectly primed and tested in the markets where they need to be deployed. A lot of the early innovation around rideshare did not come from North America. It did not come from California. It came from Asia. It came from an incredibly cramped infrastructure service, not a lot of people owning cars, bicycles, mopeds, bodas, whatever you're looking at, tuk-tuks, that there was an idea that we need to better share the resources that we have. That gets lost in the story when we talk about Uber and Lyft, right? It gets lost in the idea of like, oh, that came from San Mateo County. No, it did not. It actually came from emerging markets, right? So
Right.
I think that the warts horror story, or the opportunity to avoid that, is, let's not think about the source of innovation and the deployment of innovation as two separate places. They can be the same place if there is the right resources that are actually funding and fueling those innovations.
Great points, Rohana. Thank you for underlining them, and I think they resonate with many of us, sort of both our values and our interest in efficiency and effectiveness.
Yeah.
So we've got a great question here from Laura, who asks, what are the main challenges when intersecting international development projects and impact capital supply?
Yeah, I'm sure there's many people on the call, including, I see a few of my students that are very familiar with a concept called development impact bonds, or DIBs. So the DIB is really a blended finance structure, which is a fancy way of saying different types of investors across the spectrum come together and combine their capital in a way that is right-sized and adjusted for them. So a foundation shows up, a mainstream investor shows up, an intermediary shows up. Everybody shows up with the work that they ordinarily do, and the capital is layered so that risk is evenly spread out across the deal. Development impact bonds illuminate the opportunity to bring all of that capital together, but they also illuminate the complexity of bringing very different investors into one deal. That the goals and the objectives of a traditional investor and the goals and the objectives of a development finance institution could not be more different. And that's good. That's right. That's how these structures work. Structuring these partnerships is unbelievably complicated. And I think in my work, the complexity of partnership continues to be the number one opportunity and barrier to Laura's question. I think trying to get multiple people to understand and align against goals that are actually outside of their realm of expertise or comfort is a lot harder than we think. And that, you could say that about any industry, right? That doesn't just have to be investment or the investment sector. And so that's why I come back to the colleagues in this space that I admire the most are translators. They're communicators. They are able to bring such different folks together to try and get deals done. And it is really, really hard to get people that think about the world and think about the value of capital in different ways to talk the same language. And so I would say that continues to be the hardest challenge. I also do think, though, that just further makes the case of why we need development professionals in the conversation. What better folks to understand that things are actually really complicated and yet still feel motivated to wake up in the morning and deal with them anyway, right? Like, for a lot of people, that would be like, forget it. I'm retiring to an island. I'm going to farm for the rest of my life. I'm not interested. But it's hard work, but it's important hard work.
Right. Well, I appreciate just, that example and how you're underlining again where the global development professionals kind of background and expertise is so valuable. What are the kinds of, where are the conversations happening around the water cooler between impact investment professionals where they're saying, where what they're saying is we need a good global development practitioner expert here, even though they may not be using those words, right?
Yeah.
So where are those conversations being had? Where else should we think about networking?
We, myself included, forget sometimes that impact investing is a 12-year-old industry. It is on the grand scale of investment. It is it's not even a baby. It's like in utero. It's so tiny and young. There is so much work that needs to do to shore up the principles and foundations of the work that we do. And I bring that up because I think sometimes we rush to lament its shortcomings without realizing that there's so much work to do. It took 75 years for the venture capital industry to be the size that it is today. And impact investing is outpacing that scale of growth 10 to 1. So there is, it's early is my first point, I think. However, with how popular impact investing is becoming, I think that we're having a moment right now in the ecosystem that really points to impact washing, or greenwashing or pink washing, which I can talk about in a minute in terms of gender lens investing. But there is a cognizance that because there is so much capital now available for socially oriented solutions, there will be always bad actors and bad products that label themselves as impact in order to take advantage of that moment. Again, that's not impact investing. That's just a market-based system, right? If there's opportunity, there's absorption capacity. In the last 18 months, I think we've seen some of that. We've seen some of these funds and products pop up that are not really impact. And for the most part, it happens, they get away with it. In the last 2 years, I think there has been a moment in the investment sector where investors, LPs, limited partners, asset owners that are deploying their capital into these products are saying, hold on a second, that's not impact. Show me the proof. Show me your measurement plan. Show me your intention to be transparent about results. Show me how you select these investments differently in your impact portfolio than you do in your mainstream portfolio. And so to me, there's a really, really incredible moment in time where we're raising the bar a little bit on what impact means so that bad actors can't really sneak into the club and be unwilling to do the extra work that it takes to structure these deals. That needs to come from the investor side. That needs to come from the asset owner side. And that's where I see these conversations happening, that for a lot of these investors, which are our clients, so a little bias here, that's who we talk to the most, we're hearing people say, we have great venture capital people. We have great direct investing people. We actually don't know how to look for impact deals. We don't really know when someone sends us their measurement framework, is this good? Is it just a lot of great numbers? So yeah. I actually think it's happening at the very top of decision making, which is incredible. That doesn't really happen in an investment context, right? Where you get to invite new people with new training in. So for folks that are really, I think, motivated to be part of this space, I would say don't ignore the center of decision making. That actually there's a lot of change and demand happening there to really do something impactful.
Right. Okay. Well, thanks for raising the reality of that greenwashing that's taking place. And I think building off of that, we have a question from Mega saying, what are your thoughts about defining impact measurements to traditional quants and investors?
Yeah, right. The $1 million question, I think, probably actually the $30 trillion question, if we're being honest. So one of the biggest, I think, misconceptions in impact investing, we do this in my course all the time. We sort of rank the myths, and right up there is the idea that measurement is impossible. And I think development professionals will be the first people to throw up their hands and say, excuse me, hold on a second. It's not impossible. It is expensive and hard and non-standardized and takes a lot of work and it takes a lot of time, but it's not impossible. It's never really been impossible. It needs to be improved, but it's not impossible. And I think in the impact investing sector, we have made incredible strides to make that true. The Global Impact Investing Network, which is our industry body that releases so much great information around impact investing trends, did their 10th annual impact investor survey this year. They've been doing it since 2010. And in the survey, they asked investors what impact measurement and management framework they use to actually figure out if they're having any quantitative impact. 5 years ago, I remember this specifically, I was still at Rockefeller, and a third of the respondents actually responded to that question. And they picked, I think, whatever the top two answers were on the survey. This year, 294 respondents selected 14 different frameworks. These are not qualitative frameworks. These are quant-heavy frameworks. And I think what we're doing a better job at is showing how the frameworks are quite sophisticated. So to this very thoughtful question, there are a lot of quant shops that are actually involved in building some of the metrics that fund managers use at the IMP, for example, or with the IRIS system. There's tons more partnership. And I'm seeing a lot of really thoughtful quantitative assessment be part of the design. I think that conversation is happening more naturally than we think. I think the problem, quite frankly, is that there's no standardization. So any impact fund out there can choose whatever framework they want. So when a portfolio company comes and says, look, I've got 5 different investments from 5 impact investors, you're all asking for a different framework. It is so expensive and time consuming to measure 5 different times. That's on us. That's our bad. that there needs to be really thoughtful work on taking the burden of measurement off of the entrepreneur, and being much more of an enabler than we are right now. So I copped out of that question a little bit because I think that is happening, but I think the real opportunity is to be just much more rigorous about standardizing.
Okay, excellent. Well, sounds like there's a real opportunity there in that space. We have two other questions. If I get the thumbs up from Laura, I'm going to ask them quickly. Okay, got the thumbs up. And Rohana asked if you could just give us some quick thoughts on this, because we definitely want to leverage your expertise. So from Allison, what are you hearing about new models of impact investing in the US-based small, medium manufacturers as part of the new administration's pandemic recovery and climate action?
Yeah, I think, brilliant question. I think the biggest thing that we're going to see in the first half of 2021 is massive climate investment. And I actually think that this is a huge opportunity for US leadership, kind of in an unparalleled fashion. Blended finance, to me, is really going to become a US tool in a way that it hasn't, right? So we mostly talk about blended finance in an emerging market context. Climate, energy, and infrastructure are going to bring blended finance home. So my hope is that you're actually going to see a lot more of that capital stack structuring. Foundations are going to get involved, individuals are going to get involved, companies are going to get involved to try and pool capital together to try and source some of these investments. So blended finance plus climate plus US, I think, is going to be a 2021 success story. Was that quick?
All right. Okay. Awesome. Thank you for that. Yeah, that was quick. I thought that was good. Yes. Okay. And from Jacqueline. So she says, I'm currently in banking for UHNW clientele and seeking to expand or transition into the impact investing space outside of my employer. This is a growing space in South Africa, and I'm trying to fill the gap of financial advisory services in the philanthropy space.
Yeah.
What advice do you have, Rohana, about how to get into this sector with transactional banking experience?
Yeah, it's a really important question, because I think for the most part, advisors continue to be a barrier to scale in the space, and that's not their fault. It's the design of the system. So when you're part of a private bank that's in a larger financial institution, you can only offer your clients products that are on your platform. That's just how it works. You can't grab stuff from cool places and offer it, because there's no upside for the firm. And it's a lot of cost to diligence those things. The typical rule of thumb, Jacqueline probably knows way better than I do, is you need about 3 or 4 clients to make that really worthwhile. So I would say that if you are really keen on solving the advisor problem, which I love, there are some really cool specialty managers that are popping up that are, I think, proving that you can build specialty advisory services in the space. You don't have to just stay with a large financial institution. That if you have the interest and the willingness, and clearly you have the skill, start your own shop, start your own advisory shop, because assets are chasing this kind of investment advice in a way that typical financial institutions are just not able to serve their clients. If that's not for you at the moment, which totally makes sense, I think there's a huge opportunity to build better product. So if you're really interested in changing this space, we just need more and more funds and direct investment opportunities out there that are really, truly impact. It's going to change the game. Once demand outpaces supply, I think we're going to be in a really unique moment.
Thanks, Rohana. That is a great vote for thinking about starting your own shop and sort of moving into the field of being a founder to make this kind of change. So our final question for you is, you made that move from corporate to being a founder of a successful and growing company. Maybe 1 or 2 kind of key takeaways on for those of us who are thinking about making that move. What are a couple of things we could be thinking about?
Yeah, I think the biggest thing for me was that I had always heard our own thing was the riskiest thing, that your personal case, that hasn't been true. So I spent my career trying to find an organization where sustainably executing on an impact investing strategy was possible. And I just didn't. And that doesn't mean that organizations don't exist out there, but I realized that I had sort of built a decade of what not to do when you're trying to execute an impact investing strategy. And I only took that guidance to the next employer. And so for someone who says that they're trying to sort of change the system, that's not very systems changing. That's actually quite small. So the first thing that I realized was that I can have way more impact by building an advisory firm that then disseminates that advice as much as is possible and is desired to as many clients as possible. So how I thought about impact changed, and how I thought about risk changed. I happen to sort of have incredible freedom in my personal life. I have an incredibly supportive spouse. I have an incredibly supportive community. It actually wasn't that risky to start my own firm. As my spouse reminds me all the time, if things fold and they don't work out, I just go get a job. And I really wish that we talked about this a little bit more normally, because it is a normal thing that if you have the flexibility and the support in your life to provide impact in a better way, it's actually not that risky. If it doesn't work out, someone will snap you up in a second. And so I think those are my two biggest takeaways: how you think about impact and how you think about risk. Once you solve for those, which of course I did not before I started, it took the first year to figure those out. But once you solve for those, it could actually just be a dream job.
Amazing. Amazing. Thank you so much for sharing your perspective on these wide range of topics. And, I love both how broad and small our world is. We have Bridget, who the executive director of the Miller Center, who shared that Husk Power is a 2-time Miller Center Accelerator alum. So, love it.
Love it.
Yeah, thanks for that, Bridget. Excellent. Okay, well, please join me for a really big round of applause for Rahana. I would love you to put your videos on and just kind of show, I think, the appreciation that we really have, Rahana, for you showing up today and sharing so much of your experience with us. We appreciate the straight talk. I think it's very in line with both WIIN and WILD's ethos, right? That this is how we learn, this is how we build community, is by showing up, sharing our expertise, and making sure it's sort of concrete in a way that people can pick it up and use it in their own careers. So thank you very much. It was a pleasure to be on.
My pleasure. Oh my gosh, my pleasure. I'm so honored to be a part of the conversation. So thank you for having me.
Over to you, Laura.
Guys, thank you both so much. Amazingly thoughtful questions, a ton of wisdom from Rhianna's answers. Just really want to thank both of you. I feel very inspired personally. I want to thank all of our attendees for attending. This was the fireside portion of the event. We'd like to now invite you to stay and participate in that brief networking session. So we're going to attempt here to use the Zoom functionality to randomly generate small breakout rooms, and we'll be live in those breakout rooms for probably eight minutes or so. So we hope you enjoy this opportunity to meet a couple of new faces from the space, and then we're going to gather back here for the conclusion. So to help kind of promote conversation in your breakout room, we have a couple of optional discussion topics. And again, these are optional. They're just meant to be prompts. So feel free to use one, the other of them, or none of them, kind of whatever feels right here. The first of these is on career change. So have you ever attempted a career path change? And if so, what helped you on that journey? What advice would you have for someone pondering a career change? The second prompt, should you choose to use it, is on the interplay between impact investing and international development, which is a topic we've heard a lot about during today's event. So how do you see these two fields complementing each other? What room is there for greater coordination between the two? So I'll pass it over to Laura to go ahead and generate.
Yes, before we get into the breakout rooms, I wanted to thank so much both Fiona and Rihanna. It was so inspiring to hear you. And the breakout room conversation, I am an introvert at heart. Sometimes I found myself not participating into sessions because of the fear of breakout rooms and breaking the ice. And so please do use the topics that Renee was suggesting if you feel like it. And if not, I think please know that you are in a community of people that are just like you, have the same passions, probably similar backgrounds, and are driven by common values. So please enjoy, and I will break out you now, and hopefully it works. So bear with me.
And just a quick comment on behalf of WIIN, if you're unable to stay for this part, we really value your feedback so we can continue to improve on our offerings. Thank you. We've shared a survey link.
Okay, I think we're all slowly coming back.
Great. So Laura, can you guys hear me?
Yes.
Okay. So thank you all for attending the networking breakout. I hope it was helpful to meet a few new faces here. I just wanted to sort of end the event here by giving a really big thanks to our incredible speakers, Fiona and Rihanna, for being so generous with your time and your energy today. It was a really inspiring discussion for me, at least, and you know, incredibly grateful as well for all of our participants, everyone that's dialed in today, taken time sort of out of their busy December calendars. You know, you've really made the event what it is, so really appreciate that. And you know, we're going to try to continue the conversation that we've had today. So just a couple of points on that. We're going to be sending around a follow-up email that's going to include a list of resources on some of the topics that we've discussed here today. Secondly, if you haven't sort of already, we invite you to join the WIIN network in the WILD network. We'd love to see you all at future events here. And then please check out the new WIIN website. We've posted that in the link to that in the chat box. You can visit our website to see an overview of our group and check out any upcoming events that we're having in 2021. So before we go here, just want to invite everyone to please share some feedback on how the event went. You should see the SurveyMonkey link kind of in the slides there. That should just take a minute. And we look forward to seeing you all at WIIN events in 2021. Thank you so much.
Thank you. Take care, everyone.
Thank you so much. Take care, everybody.
Congratulations, WIIN team. That was a great turnout, and thank you. It was really a pleasure to partner with you on this, and I think you had a great vision for the session.
Thank you. Came together so nicely. And the breakout rooms went great. Had wonderful conversation, and I think it's very nice to connect in smaller rooms.
Oh, good. I'm so glad. Well, I think people are so appreciative of that, you know, meaningful connection.
Yeah. Thank you so much, Fiona, for all of your advisory, for being, you know, I think this is the second, if I remember correctly, the second year-end event that you've closed out with us, if I'm getting the timing right. But
it's a real privilege. Thanks a lot, Sarah.